Hello, hello, hello. Happy OPEX Friday. How is everyone doing? Good morning to USA. Good afternoon to Europe. I guess it's good evening to Asia. Oh, afternoon, Charles. Good morning, Patrick. Good morning, Dave. Howdy. Hello, hello. Happy Jack. Good morning, Martinez. Jacob, good morning. Is there potential to weekly double top on Netflix, or will pre-market price action? We can peek in uh, at that. Grand Rising Christoph, OPEX days now added to my days off calendar. Let's see, you can take days off. And for long-term trades, OPEX shouldn't really affect anything. You shouldn't have stops that close unless, hey, if market move to within your stop range and it stops on OPEX or hits your target, fantastic. If not, it's not going to affect you if you're a longer term trader. Short term, you don't have to trade every day. Not taking a trade is a trade. It's a trade. It's a very neutral trade. You don't have to worry about things. And there are days that just are not good trading. Also, I did stats years ago on my trading. Friday was my worst day, period. I had the worst performance when I tracked it of day of the week. It just happened for me. I mean, it could be different for everybody, but Friday was clearly by far my worst day. So you gotta, that's why it's handy to track stats. So if you know, like, what do you think OPEX Fridays? Maybe that's just a day you take off if you're a short-term trader, unless it develops into a strong trend day, but most of them are not trend days. Yeah, Harker, he's talking this morning. You got right there. Good OPEX Friday. GOPS was 22. Let's see. Thank you for being here, Sterling. Good morning. Wish everyone a successful trading day, too. Good afternoon, Eric. Let's see. Hey, Jason. Thank you for being here. Good morning, Paul. Well, Sterling putting all the information in. Hey, Mike, might let the SBI rally so I can add to my covered call. Well, I can't control where the markets go. Love stats and spreadsheets. Also, for everybody in the Discord server, I did put up a new article in the article section this morning. I found interesting about volatility, the VIX, and a bunch of volatility skews. So check that out. It's under articles. I don't know if anybody saw it already. Hello, George. Let's see. Did I get to Chris already? Boy, has your trading gotten better or worse since you started doing these live streams? It hasn't. Hasn't affected it that much. Some days it's just I'm not as, I'm doing stuff for the live stream more so than I'm doing stuff for myself. So I've delayed things or changed time frames. But it definitely hasn't made it worse. Again, I've been in the market since '92. So it's a long time. All right, let's get right down to it. We got close to 800 billion in option expiration and rolls today, so that is a pretty big number. As you saw Sterling putting in the comments, Harker is speaking now. Also stressed, I saw earlier that he sees more rate hikes. Higher, the terminal rate is higher, so at least a couple more. We got Waller speaking at noon, and then starting tomorrow, it's technically tomorrow, but it's really end of day today unless they're speaking on a late night thing, which I don't see anything. It's Fed quiet period until February 1st. We have the rig counts for oil traders. Existing home sales, that's not really going to be market moving. So that's where we sit. Market map, you have Google up substantially off of layoffs announcements. Lots of layoff announcements. Also, I see Wayfair was doing a lot of layoffs. So we're good. We're getting into that layoff season. So for the people who don't think earnings are going to be affected, you don't start just magically laying off like 12,000 people unless you were worried about your numbers or expecting a downturn. So let's see. Tesla was a slight gap up. Com services leading it. And, with this one, Google is income services and that leading higher. Then consumer cyclical and real estate, basic materials still in pullback mode. Fed watch still 94%. And fear and greed back to neutral mode. People keep asking, why do we track this? Because I start watching for tops when we get in greed, especially higher greed. And I start watching for bottoms when we get to lower fear or extreme fear. It's a handy gauge to get sentiment. And here's also, remember, Options 22 asked the question, well, why not just, is it just a play to go to 4,000? Well, option positions can even change before OPEX. Because you remember that huge gamma wall at 4,000? There's still a gamma wall, but look at what's happened at 3,900s. Remember, I think it's closer to closing in on 60% are extremely short-term options or putting on positions based off close to expirations. Look at this. 3,900 is now a massive gamma wall. So keep that in mind also. This changed drastically over the last couple days, which can happen with new positioning. So in negative gamma, which means you can still, and remember, as you get closer to the end of today, you can get some interesting swings, especially when you're negative gamma. Why? Because the rate of change goes, every point in the S&P can change things drastically. So technically this morning your gamma flips at about 39.32. All right, so above 39.32 you start getting into the dampening effect. As long as it's below there, you can get into more volatility. Please remember that. Not much in terms of major earnings today. I did look at Ally, however you say it. I can never pronounce stuff, and they were gap up today. I did not tear into the numbers though, so that's pretty much done. Where are we? Was I ever a scalper? Define scalper. I've traded on very short time frames, so. Key things, as I still went over from yesterday. We have this little potential double from yesterday, which I said was a 1 hour. Where is that? Where is my potential double? This little thing. Still no close below the 62.5 and getting close down to that 75, which is the walkaway stop, but did not go through it. So that pattern is still in play going into the open. However, you keep in mind that 39.36, 39.40 area is going to be key resistance. Again, this can be a very, very potentially choppy day because you have the upward pattern in the S&P and you have the downward pattern in the Russell. Okay, and the Russell, now this was a stop reduction hitting the first stop area. So we get a close above 1849 and that is off the table. Could get that in the open or a trade through, like a rapid trade through 1850. Takes it off the table after only hitting the first target. Overall, its key resistance is up here at the 39.35 area. Key support 39 to 39.06. Other than that, I would not get chopped. If you have little short-term patterns you trade, fantastic. I think today is the day you don't put things at risk and you just let today roll off, and then we got earnings next week. So come back and be ready for next week. If you're already in a pattern, then manage your stops and your targets. If you're trying to trade this to the upside, and we do start running to the upside, 39.47, 39.54, 39.60. Does this pattern have to complete today? No. Could it still be in play if it does not get stopped for next Monday or Sunday night / Monday? Yes. So, also you notice here, this is why it's slightly lower probability again, because it's against the rotation zones, but you see popping in, trying to get through that 8. That 8 is key. So that's why we use the rotation zones. And yes, we do have a clear path move higher. So even into next week, if it starts getting a breakout play to the upside, you have a clear path move. And the next major target on that is 39.70. Your NASDAQ, which there was no pattern in, to the upside, it's keeping an eye on that 4-hour rotation zone, but you have some pretty decent major resistance right around this 11,450, 11,453 area. You break above there, you're still at the rotation zone, but you get above about 11,475, you can go into the clear path move. And the key breakdown area is roughly 11.5 to 11.534. Key support, I'm still using about this 11.350 area. Yes, in the Dow, we have a potential double bottom, which could still be in play for potentially next week, unless this really gets extended to the sideways, but that would be at least a 4-hour close above 33,326 and lower probabilities against the rotation zone. 34,456, 33,520, 33,579. To the downside, you can see even on a break below this 3360 area, you're just trading into major support. Major support below here in the Dow. That's all the support from back the final 2 weeks of December. So, not expecting that to get broken today. Where I really get interested is below about 33,750 for a run at that quick 200, which would be more of a scalpy trade. Then if that 200 breaks, it could get interesting. Russell, we still have that little minor pattern on there. Remember, it was a 15-minute pattern. And looks that could be done going into the open. Other than that, support area is still 1833. Major, unless there's a short-term pattern in the Russell, it's pretty much not a lot of great setups today from a larger term. The key resistance is 1850. You break above 1850, you could see a run to about 1854, 1855. Let's get into the spiders and the Qs. The spiders, slight gap up today. So if we roll over, we'll be looking at yesterday's close. 388.64, trading right now 389.66 on a rally above. My two key areas I'm watching are 391 and then the closing price from Wednesday, 391.49. Those are my major upside targets. If it's a tight range day, those might not get taken out today. If we roll over, 388.64, and then it would be yesterday's low, 387.26. Below that, your major support is 386.22. The Qs, again, on a rollover play, you're sitting 276.87. First area I will be watching for support is 276.22, which is yesterday's open. Then I would target the gap fill play to 275.15 and then yesterday's low, 273.89. You might wonder, I normally don't stress lows or highs. Why am I stressing them today? Because they come into more play when it's OPEX, especially if it's range bound. To the upside, 277.38 is yesterday's high, which would be the first target to the upside, and then the close from Wednesday at 277.88. On I'm the only investor holding on to cash, except here at PTP 95, either gamble or rely on their 401k investments. And and 401ks are long term. So, you don't want to be changing that. Although I'm probably a little more active in my wife's 401k when I see key rotations in and out of stuff. But you know what? There's nothing wrong with being in cash or parking cash into short-term instruments. Look, if you can get 4.5 to 5% risk-free for a year when we could have a lot of volatility, I'd rather keep money in short-term instruments. I'm not talking about stuff that you're going to be very short-term trading with, but for longer term, hey, if you can collect some 4.5, 5% and figure out ways to do that for the year, very, very risk-free, and then we get major setups forming that trigger, then roll it into longer-term investments. I think that's a very smart strategy. I think it's a very smart strategy. With this kind of, we could get potential volatility again. There could be a lot to go on. So I'd rather lock in a pretty risk-free rate. If I could get 5% fairly risk-free and then accentuate it with some short-term trading, fantastic. And then wait for major bottoming patterns. You get major bottoming patterns, rolling it into longer-term investments. DAX still holding this 15,000 key level. We do break below there. We have some gaps left behind, but the key levels I will be utilizing will be first about 14.9, and then the gap left behind at 14.834, all within the daily rotation zone. The notes, still not a great long-term setup. We reconnected with the 200, still breaking back down in the key support, not touching anything, letting this to set up into next week. Dollar index, still trying to carve out a bottoming formation right around that 50% harmonic. I'm still watching for this. Not necessarily today, but going into next week, if this can get a pop-up VIX is nothing worthwhile looking at that right now. Crude, again, you're still this 81.50 area has not triggered the double. That's the only thing I'm watching for today. And that does not mean you have to get in it today, or anybody has to get in it, period. Again, we don't give trading advice. We show how to trade patterns. But that would be the trigger. It's confirmed but not triggered. What's interesting is I am keeping an eye on something else with crude. If it makes another push higher to 81.61 or higher, and then does not close above 81.50, we've technically got a double within a double, and a double top could bring it back down. So I'm keeping an eye on both. The double top area has not risen high enough yet. So keep that in mind. What else do I need to really focus on? The 10-year Japanese. Why? Because we could start seeing a slight bottom for the short term in the yen. And this is not pushing up against the 50 mark again. If it starts pushing up against the 50 mark again, then I will not be so confident in putting in a short-term bottom. The yen rallying up, remember, see this blue line obscured somewhat by my black line, but you see this blue line? 50% harmonic from the major run-up. So it's not surprising. I am watching for a potential. Remember, this is a long-term trade. We could easily get back into the weekly rotation zone. So for people, trying to time this, this could go on a little more than you think. I would wait for a topping pattern again. Get my line. There we go. So that's something you gotta wait for, the retracement setups if you're trying to play it in the longer term. Key area I'm still watching on the euro is about 107.65 for a breakdown back to 107, but that's a scalpy trade. Nothing really. Currencies I'm waiting on. waiting on. The only thing that's really interesting on my radar screen for the pound is if we trigger this pretty substantial potential double top. Bitcoin gone back to sleep after all the wash trading, taking it to the higher levels. Tesla gap up today. So on a rollover, it would be the gap fill trade above. We're trading 129. If it rallies, the target area I'm using is this mid 136s. And then above that, it would be a run to 140, but I doubt that will happen today, especially with cycles at the top trying to roll over. I'm more watching if we do stagnate, watching for a gap fill play. And then if we start breaking below about those 125s again, watching for the other gap fill back to Friday the 13th. We had Netflix. This is still fine. It looks like we're going to open around 337.65. That could be a little potential double. We'll have to map it out later to see if it rallies too much, but remember, that's probably not going to trigger anywhere close today. So you don't have to worry about that from a short side. And by the way, if you're trying, I would not even be playing for a gap fill yet. Your key support, if it does roll over and tries to retrace something, 332.70 is going to be a first key support area. Resistance, you can still utilize these targets, 339.50, then 347.55 to the upside. I know the NASDAQ mini futures are different than the actual market. How about the S&P? What do you mean with the actual market? Are you talking with the cash indices? I don't understand what you mean with the actual market. Unless you're comparing like the S&P to the SPX. And yes, because of dividends and cost of carry and everything else, they trade slightly differently. There's a premium many times, like the SPX right now is this 38.98. The futures, and that's still from yesterday's close. The futures yesterday's close was 39.15. Why? Because the futures account for dividends and everything else, which is not in the cash indice. So that if you're saying that's why it trades differently, yes. And there are times it can also be trading at a discount. And it's also based off interest rates. Okay? Your short-term rates play into it. When it was zero, they didn't. Now they do. So that's if you're saying, why do the minis or the S&P full contract or whatever you're trading trade differently than the cash indice? That is why. Scalper trades that might last seconds? No. I never did anything that could last seconds. Minutes? I mean, I've traded 5-minute patterns, but they could be in for minutes to even hours, depending on what it takes to hit the target. Morning, John. I covered Netflix, Disney. Come on. Disney sympathy gap with Netflix. If Disney rolls over for short term, I'd just be targeting 99. Other than that, you have this horribly sloppy. It's really a bad pattern actually. But I'd be using this 108 level as a target. That's why it's still up there. But it's confirmed but not even triggered yet. Realistically, if you were trying to play a breakout in Disney over the next little bit, ahead their earnings are a ways off, I'd be utilizing these target areas. If it got above this 101 area again, I'd be utilizing about 103.25 to 104 as the first target area. Then above that, we got the harmonics with the retracement and the primary harmonic or the extension harmonic coming in at 105.20, 105.30 area. So those would be the targets I would use for any breakout trade. And it's a pretty decent longer term stop level because you have yesterday's low. You break below that, then you have gaps left behind. Good morning. Where can I find information on how futures affect cash session? Well, the cash session is just, it's literally the calculation of, like the S&P, it's the calculation, the weighted calculation with where all the stocks are trading. Now what you have is you have the ARB plays between the stocks and the futures. Okay, that's how it's kept. So you don't have the futures affecting the cash. The futures, if it gets too far out of line with where the stocks are trading, there are ARB plays that happen, which means then they're automatically executed because it's executing baskets of stocks. And it's not all 500 of them, by the way. It uses the highest weighted stuff for the majority of it. So you get that where, all right, if it's too undervalued, if the stocks relation to the futures are too undervalued, the futures are sold and the ARB in the stocks are bought in their ratios. If it's too overvalued, the stocks are sold. That's where you get buy and sell programs that happen. So, but that's done on an ARB basis. That's nothing you're going to ever do. Don't even worry about it. You'd have to be a big house. So, where do we sit? Do we have a valid double bottom on the Qs? On what time frame? You got to put in a time frame. On this little area? No, you don't. And remember, I do not use pre-market info, and we're trading up here anyways. So you do not have a little double bottom. Please, let's take a look at the open real quick. Just don't get whipsawed today. You don't have to trade every day. It could just be one of those horribly messy days. So we already had some rapid, I mean, this didn't even hold up for long. So you had the spike above 1200 and look, we're already back below 400. This is just, so there's any opening positions that's caused a spike up are already, it's already back to, look, we're already collapsing back to neutral mode on the tick, which is actually not very bullish. That quick a collapse. But it's still within this horrible range, so just don't get chopped. You're coming into major support. All right. I think we covered everything I needed to cover that's important. Let's see. Can we peek at NVIDIA real quick? Then I have to do a couple things. NVIDIA. I mean, the only interesting thing to me is if you take out yesterday's high, a run for the prior gap fill, and other than that, your key support is yesterday's lows with the rotation zone. So there's not much in a longer term. We can do that later because it's not gonna, nothing major is gonna trigger today. SMH. I mean, it's virtually the same thing with NVIDIA. Although you have your support coming in about 219.78. We'll take a look at longer term patterns later. All right. With that, let me just peek at the NASDAQ. Again, I can't stress enough, do not get chopped. See, there's, oh, ooh, there we go. Back to key support, but I won't get interested really to the bear side, so we start taking out this 39.11 area. There's way too much support. We get down below that, we could make a quick run to 3,900. Whether that sustains into the close, it's option expiration. So you're still going to get these friggin' whipsaw moves. Just, if you have a pattern, you can trade it. If you don't do stupid. And I will see you this afternoon. Bye.